In virtually all scenarios, if you're a holder of cash or bonds, you end up a loser when the panic happens to the currency. In virtually all scenarios, if you're a holder of cash or bonds, you end up a loser when the panic happens to the currency.
Imagine waking up one day and seeing silver prices skyrocket to levels no one thought possible. What if I told you that by the end of 2024, experts like Clive Thompson believe that silver could be on the verge of an explosive surge, breaking all-time highs? You might be thinking, that sounds crazy. But hang on, there's more to this story than meets the eye. Today we're going to break down exactly why silver is about to soar, and trust me, you won't want to miss out on what's coming next.
High up on this, maybe it's as much as 50% probability. I think it comes about in a few years' time after governments have got the central bank digital currency up and running. Now, that's the CBDC, and I know there's a lot of opposition from parts of the population, myself included, to this, but I think many governments are determined to go ahead with the CBDC. What people really have to understand is, although the central bank digital currency will look like and feel like your existing credit card, it'll look like and feel like the cash in your pocket, and the money in your bank, you can move the money from your bank to your CBDC wallet one for one, no problem with that. And you'll have probably two types of wallets. You'll have your CBDC wallet held by your bank, and you'll have your CBDC wallet you're carrying around on your phone. Most governments who've got this coming have hinted at there will be some sort of limit as to how much money you can have in your personal CBDC wallet. I think the Bank of England has bandied around a few numbers from £5,000 to £20,000. I haven't actually seen specific numbers anywhere else, but I'm sure they must be out there. What I think will happen with the CBDC, which will ultimately lead to the possibility of a reset, is this. I think in the early days, the central bank digital currency will be running alongside your other types of cash, your bank account, your credit cards, the cash in your pocket, which in many countries there'll be rules to say it's still legal to use cash, the paper cash in your pocket, or the money, the coins in your pocket. In fact, in Switzerland, we're shortly going to have a referendum on that to force the government to agree to keep cash in circulation despite the CBDC, which is planned to come. But I think, realistically speaking, over time, the use of cash will fade away because people just see the convenience of paying digitally. They already do. I mean, a lot of people just don't carry cash around with them anymore anyway. They pay everything with their watch or their phone or their card, depending on the person. So I think once the CBDC arrives, people will say this is just a continuation of the same. It's much of the same. But what people have to understand, it's not the same. The central bank digital currency.
Silver has always been more than just a shiny metal. Right now, we're seeing a perfect storm of market conditions, aligning for what could be one of the biggest rallies in silver's history. Inflation is sticking around longer than expected, and central banks are signaling they're ready to ease up on rate hikes, creating the ideal environment for precious metals. And here's where it gets really interesting. Silver and yields are inversely correlated. With 10-year yields nearing a confirmed top, silver is primed to benefit massively. Now think about the US dollar, which has been losing steam lately. As the dollar weakens, silver becomes even more attractive as an alternative investment. You see, silver is often considered a hedge against economic instability, and right now, with inflation not going anywhere and interest rate cuts on the horizon, silver is perfectly positioned to thrive. Clive Thompson points out that we're heading into a silver seasonality window, where historically, the next 2 quarters show a pattern of rising prices. He's not alone in this forecast. Banks are starting to shift their outlook on silver, recognizing that the combination of physical demand and geopolitical tensions makes it a solid play for 2024. But let's talk real numbers. Silver recently moved toward $34.70 per ounce, a level that almost no one expected this quickly. Experts like Thompson believe that once we break through that resistance, the next target could easily be $48, $50, potentially by mid-2025. And once that ball starts rolling, the climb could happen much faster than anyone expects. So, with inflation pressures, a weakening dollar, and the end of yield hikes in sight, silver's fundamentals have never been stronger. But here's the big question. Are you ready to
I think the word
capitalize on this
reset is a
opportunity before the
relatively
rest
new
of the market
word.
catches on?
In the past, currencies have failed, and this has happened all around the world over and over again. Not so much in recent years, but in the 20th century, there were a lot of currency failures, and before that, even more. And when those currencies failed, the winners were generally those who owed money, and the losers were generally so winners were those who owed money and had assets, and the losers were generally those who owned the money. Because we're talking about paper money failing here, because not gold. Because if you have the gold, you're going to be fine. But if you have paper money and the currency fails, well, you've got a claim on nothing. And I don't do it anymore, but in my younger years, I used to collect banknotes. And one of the fun things about banknotes, I could find from all around the world these banknotes with more and more zeros. And it became a sort of passion for me to see which banknotes I could find with the most zeros on them. And you'll find country after country after country, where they started with one, and then it became 10, then it became 100, then it became 1,000, then it became a million, then it became a billion, and then it became 100 billion, and so on until they restart the currency. So we're not there in the Western countries by any means, but you never know when things start to speed up. And when they start to speed up, it's going to be difficult, more difficult anyway, to buy things that you'd like to buy to protect yourself. So I think those who are holding large cash balances need to think about it earlier rather than later, so that they can deploy their money into something other than short-term deposits, where potentially they're at risk if there's suddenly a rush for assets. And they say, oh, rush for assets. Oh my God, but I don't want to pay 50% more than it was a month ago. That's going to hurt. And then they'll be left holding the cash. And then one day suddenly the government switches off. And I can tell you in a minute how that might happen. There's one scenario which could work for many governments without actually having a default.
How do you think that reset, as you're saying, would play out?
So this is one of several scenarios. So I don't want people to take this as being the only thing that will happen and the thing which must happen. But in virtually all scenarios, if you're a holder of cash or bonds, you end up a loser when the panic happens to the currency, when there's a currency crisis. But in this particular scenario, which I'd like to discuss, which I think is probably a fairly...
Let's take a closer look at the key indicators that Clive Thompson and other experts are watching closely, and why they're pointing to an explosive silver rally. The first one, gold. Now, we all know that gold and silver tend to move together, and right now, gold is in a secular bull market. This is important because when gold rises, silver usually follows. But here's the kicker. Silver tends to outperform gold during bull markets. So as gold continues to break higher, silver could potentially skyrocket even faster. Next, we have the 10-year U.S. Treasury yields. Here's why this matters. Silver and yields have an inverse relationship. When yields top out, silver starts to move. As Clive Thompson points out, we're right at the point where those yields are peaking. In fact, recent signs suggest that bond prices are stabilizing, which means yields are likely to drop, clearing the path for silver's next big move. But that's not all. The U.S. dollar is another crucial indicator. Silver thrives when the dollar weakens, and right now, the dollar is losing bullish momentum. There's no longer the strong upward pressure on the dollar that we saw earlier in 2023, which means silver is becoming a more attractive asset, especially for international investors looking to hedge against currency risks. And finally, the futures market positioning. What traders call the commitment of traders, COT report. This is where it gets really interesting. The COT data shows that commercial traders, who are often considered the smart money, are positioned in a way that suggests they expect silver to break out soon. According to Clive Thompson, when you combine this positioning with the historical pattern of silver's seasonal strength, you get a perfect recipe for a rally. All these indicators are lining up gold's bullish trend, peaking yields, a weakening dollar, and favorable futures positioning. Clive Thompson believes this is the perfect setup, and if these signals are right, we could be on the verge of something massive. But here's a question for you. Would you be prepared when these indicators finally trigger silver's breakout?
I'm not suggesting that we're going to have an invasion and some enemy is going to force a new currency on us, but it could be your own government in an emergency situation for your own good, of course, they'll say. And the man in the street will not be burdened by this, so he'll start spending a lot more. He'll be able to rehypothecate his house. Because you know how people are, they tend to, if their house is worth more than their mortgage, they tend to spend the difference. There's a lot of people who do that. So I can see that encouraging people to borrow and spend. So the economy will be booming as the man in the street spends more. The government will have a lot more money in its coffers because it won't have borrowed so much that it can embark on all kinds of programs of spending, infrastructure projects and anything else they like, and bailouts and universal basic income. The companies will be doing great because they got rid of all their debt. But don't forget, there's a lot of losers who are going to, and that will include you and me, because I'm for certain going to be holding some cash. The question is, to what extent will the losers be losing? So if you've got all your money, 100% in cash, and it's a lot, you're definitely going to be a loser. If you've got a small amount of cash, I don't think you'll be a loser at all. I think the government will see the man in the street, the 95% of the population who struggle to put a few $1,000s together. I think they'll be just fine. They'll just carry on as they did the day before. But someone out there, and that would include people outside your country, people all over the world, are holding either physical cash or bank deposits in the currency of another country, like the United States or the United Kingdom or Europe. And, those will be large balances. And because they're not citizens of their own country, they will not be bailed out. They're not citizens of the country which they've got the money currency in. So this is a scenario which might happen. There are lots of other scenarios which may happen to solve the debt problem, because this is a kind of situation.
Now, let's take a step back and look at the bigger picture, because this isn't just about market fundamentals. Geopolitics is playing a massive role in silver's trajectory, and the world stage is set for silver to take off. First off, we're witnessing significant geopolitical tensions across the globe. Whether it's the ongoing economic uncertainties in the U.S., tensions between China and the West, or the ripple effects of Russia's war in Ukraine, these factors are shaking up global markets. Historically, whenever there's instability on the geopolitical level, precious metals like silver tend to rise as investors flock to safe haven assets. And with inflation still a concern, silver becomes even more appealing. But here's the real kicker. China's massive stimulus package, announced just weeks ago, is a game changer for the silver market. This stimulus is expected to boost demand for commodities, including silver, and it's no coincidence that we're already seeing the price start to reflect that. China is a massive player in the silver market, and when they pour money into infrastructure and manufacturing, silver demand follows. It's not just China. Globally, central banks are preparing for rate cuts, and that will have a huge impact on silver. Lower rates made it cheaper for investors to hold non-yielding assets like silver, driving up demand. So as these rate cuts start to roll out, expect silver to climb even higher. Now you might be asking yourself, how do all these geopolitical moves affect me? Well, here's the deal. When the world gets turbulent, smart investors look for stability. And right now, silver is one of the few places offering that. With all these geopolitical pressures mounting, We're looking at a situation where demand for silver could outpace supply in a big way. So, are we on the brink of a silver shortage? Could these global dynamics lead to a supply squeeze that pushes prices through the roof? It's definitely something to think about as we move further into 2024.
Owes money because from the positive side, as far as companies are concerned, they all have debt, which is denominated in the currency, the lawful currency of today. Now, unless they pass some law to say everything is converted to the new currency, one for one, that would be a stupid law because there would be no point in having a new currency if they pass such a law. Then you wouldn't bother with a new currency. But companies have all this debt in the old currency, and suddenly this old currency becomes effectively worthless or defunct. That means the company is going to be writing up a large profit thanks to they're writing down the value of their liabilities. Those liabilities are heading to zero. So the companies are able to reborrow and build more factories. That's very good for the economy. The man in the street is no longer burdened by his mortgage or his old credit card debt, which is still left behind in the old currency. Now, I'm not saying the bankers will let that happen. It's quite probable if we haven't got them already out, we'll see some currency reset clauses creeping into contracts like mortgage contracts. I've already spoken with one American lawyer who tells me that she is already writing that in for the benefit of those who are owed money. So it would go, let's say you're building a factory or buying a piece of machinery which will be delivered in a year. Effectively, the one who's going to receive the money wants to be sure that the money is still going to be worth something by the time they get it. So currency reset clauses are being written in. I mean, you can imagine an extreme example of this wouldn't happen in the United States, but let's say you're in a particular country, we go back 100 years, and Japan has invaded Hong Kong. What happened? Well, the Hong Kong dollar, or the dollar of Hong Kong at the time, became effectively worthless, and the new currency became the Japanese currency. So that would have been a great time when a currency reset clause would have worked, because you had the people who, but they didn't have such things back then, but anybody who happened to owe money in the old currency found it was actually worthless. And anybody who had deposits in the old currency lost all their money because there was a new currency came into existence, and that was the yen, and that started circulating.
History has a funny way of repeating itself, especially when it comes to silver. If we take a look back at the last time silver had a massive rally in 2011, we can see some striking similarities to what's happening right now. Back then, silver skyrocketed to nearly $1.50 per ounce. Why? A combination of economic uncertainty, inflation fears, and increased demand for safe haven assets pushed silver prices to historic highs. Sound familiar? Today, we're seeing almost the exact same setup. Inflation is high, economic instability is causing concern, and investors are once again looking for safety. Clive Thompson and other experts believe we could be on the verge of a similar rally, and this time silver's breakout could be even more dramatic. But it's not just about the macroeconomics. Let's talk about the technicals. Silver's price chart is showing a textbook cup and handle pattern, a bullish indicator that suggests a significant move is coming. For those unfamiliar with this pattern, it's one of the strongest signals in technical analysis that a breakout is imminent. This pattern took years to form, and as Clive Thompson points out, it's now nearing completion. Once silver clears key resistance levels, like the $34.70 mark we're closing in on, it could rapidly accelerate toward the $48-$50 range. But here's the question. Could this time be different? What's interesting about the current setup is that we also have an increasing number of institutional investors stepping into the silver market. That's something we didn't see as much of in 2011, and it could fuel the rally even more. As these big players enter the market, the pressure on supply could intensify, pushing prices even higher faster. So as we look at these historical patterns, we have to ask ourselves, Are we on the brink of another 2011-style rally? And if silver's price explodes like it did back then, where could it go this time? The conditions are eerily similar, and all signs are pointing to a repeat performance. But the real question is, are you ready to take advantage of it?
Candidates were being bailed out of the pension funds because the pension funds own lots and lots of bonds, which are now effectively unspendable. So you'll be able to pay your pensioners the old currency, but the pensioners won't be able to do much with it. So it's quite likely they'll decide to some extent to bail out the pension funds, and they'll probably arrange to give everybody a universal basic income to sweeten the deal so nobody starves. That would be a nice one. Of course, your salary, your dividends, and your interest will maybe not your interest, but your salary, your dividends will be going most likely into your CBDC wallet. But as for moving your capital, your old capital into it, probably the answer is going to be at some point, no, you can't do it. There's another form of capital control. We've had capital controls around the world over and over again, and in my lifetime, and in the UK where I used to live. When I was an adult, we had what's called exchange controls. So this is just another way of limiting what you can do with your money. And effectively, if we get to this bottleneck situation where they shut off the ability to move your old capital into your wallet, the economy is effectively only running now on the new money, not the old money. The old money can't come and destroy the economy, so that the government's debt is still there, but it's fading away into worthlessness because nobody can spend it. Nobody wants the old currency. Perhaps on day one, the old currency will be trading at 70 cents on the dollar. People will say, well, you give me an old dollar and I'll put 70 cents into your CBDC wallet, a sort of black market transaction. And I bet you 3 months later, it'll be at 20 cents on the dollar. And a year later, it'll probably be nothing. So this would be one possible scenario which would favor the government. But of course, there's going to be an awful lot of people who are bag holders. Bag holders are the ones who are holding the monetary assets, money market funds, bonds, deposits, and cash in the bank, which is not in your CBDC wallet already. So it will create a problem for all the people who have monetary assets, but it will create a bonanza for everybody and every company.
While fundamentals and historical trends are important, there's another key element that's driving silver toward explosive new highs: investor sentiment. Right now, we're seeing a major shift in how investors view silver, and it's not just individual investors. Institutional players are jumping in, and that's a huge deal. In recent months, there's been a significant uptick in institutional interest in silver. Hedge funds, asset managers, and even major banks are increasing their exposure to silver, seeing it as an undervalued asset with massive upside potential. Clive Thompson has pointed out that this kind of institutional movement is often a signal that something big is coming. When the smart money starts pouring into silver, it's usually a precursor to a major price rally. Why are these big players suddenly so bullish on silver? It's simple: supply and demand. The physical silver market is facing a potential shortage. As we mentioned earlier, silver is used in everything from electronics to solar panels, and the demand for these products is only growing. With supply tightening and demand soaring, we're looking at a situation where silver's price could skyrocket just based on the fundamentals of scarcity. Now think about this. When these large institutions start accumulating silver, it's not just about short-term gains. They're positioning themselves for the long haul, anticipating that silver will be a critical asset in the future. And when institutions start buying in bulk, it creates a ripple effect throughout the market. Retail investors see the moves, and momentum builds, pushing prices higher and higher. But here's the big question: how high can silver go once the institutions are all in? Right now, sentiment is overwhelmingly bullish, and with each passing day, more investors are realizing the potential silver holds. If Clive Thompson's predictions are correct, We could be looking at a price surge unlike anything we've seen in the past decade. So what does this mean for you? If the big players are positioning themselves for a silver rally, the window of opportunity for smaller investors might be closing fast. The question is, will you get in before the market takes off? Or will you be left watching from the sidelines as silver makes its move?
And the currency will be going down. There'll be a complete loss of confidence in the currency. So what do you do when that starts to happen? Well, there's many things the government could do, but one thing they might well do is say we're going to limit what you can put into your CBDC wallet unless you get permission. So you might get permission for some things, but if there's a chance that you're doing it because you're speculating against the currency, like buying something, the answer is no. If you're putting money into your wallet to feed your kids, well, probably they'll say no problem if it's up to X, $20,000 or $10,000, whatever the figure they decide. But if you want more than that, you better have a bloody good excuse to justify it. And if your excuse is you want to buy something, well, sorry, that sounds like you're speculating against the currency. So the answer is no. So we find we've got not only a bottleneck on what you can put in your CBDC wallet, but it might be a bottleneck where it gets closed off completely. And of course, they would call it a temporary restriction, but the word temporary usually means, in this sort of situation, permanent. So you'll find that at some point, the money you've got in the bank is effectively undeployable because you can't spend it on anything. You have a maturing bond from a well-known company like Microsoft or Apple. It comes into your bank account, but you can't move it into your wallet and spend it on something more tangible. Perhaps you'd like to buy some antiques or a house or some gold, whatever. You won't be able to do that because it's bottlenecked. So what does that mean from the government's perspective? It means that they no longer have to worry about their levels of debt when it comes to managing the economy, because that debt can't now be, or the worth of that debt can't now be moved into the economy, destroying the economy. But they will be able to borrow in central bank digital currency, which means that they're starting with a debt to GDP ratio of 0 instead of the 100-odd% that we've got in most countries. So if you start with a low debt to GDP ratio, you'll be able to bail out all those who are hard done by due to this action of bottlenecking the conversion to CBDC. So one of the obvious...
Everything we've discussed so far leads to one undeniable conclusion. Silver is on the verge of a historic breakout, and the evidence is overwhelming. Clive Thompson has laid out the blueprint for why 2024 could be the year that silver reaches all-time highs. As we've seen, the conditions are aligning perfectly. Think about it. Inflation is persistent. Central banks are preparing for rate cuts, and the U.S. dollar is losing momentum. We've got rising demand from both industrial and investment sectors, while supply remains tight, leading to the possibility of a major shortage. Add to that the technical patterns, like the cup and handle, which point to an imminent breakout. And don't forget the key indicators. Gold's bullish movement, peaking 10-year yields, and the positioning in the futures market, all pointing toward higher silver prices. But here's where it gets really exciting. Institutional investors are already making their move. They see the same signals we talked about and are positioning themselves for a massive rally. And when the big players get involved, the rest of the market tends to follow, pushing prices up even faster. Remember, silver has a history of explosive moves, and with all these factors in play, we're looking at a scenario where $1.48 to $1.50 silver by mid-2025 isn't just possible, it's probable. So what does this mean for you? Well, if you've been on the fence about investing in silver, now might be the time to act. Clive Thompson believes we're about to witness a once-in-a-lifetime rally, and the window of opportunity is closing fast. As we head into the end of 2024, the question isn't if silver will break out, it's how high will it go. But before we wrap up, remember, this is not financial advice, and any investment carries risk. However, the signals are strong, and all signs point to silver being one of the most exciting opportunities of 2024. Are you ready to take advantage of it?
This question several times in the last few weeks by people via LinkedIn. I often reply to questions that way. And the answers aren't always the same because it depends on the situation. So as a generality, and this is really just a generality, it's not financial advice, if you are somebody who has more than sufficient income and sustainable income that you can afford to pay the interest on your mortgage and have plenty left over, I don't really think there's any point or any good reason to pay off that mortgage at the moment, even if you've got unless, of course, you have the cash and you don't know what to do with your cash. But if you've got a choice, if you're the sort of person who likes to buy things, anything, whether it be tools for your garden, plants, or tangible things like gold coins or shares or other houses, whatever. If you're that sort of person, I think I would carry on investing your money and keep your mortgage going because you can afford to pay the interest. On the other hand, if you're somebody whose job is somewhat precarious and you don't know if you'll have much income tomorrow, it would make sense to reduce the risk that you'll suddenly lose. It makes sense to reduce your exposure to the interest on that mortgage by reducing the mortgage. So, if you are not in a very good financial position, then I would be working very hard to repay the mortgage, and I wouldn't go into the situation of trying to gamble on maybe I'll get a debt jubilee and save it all. But there's going to be obviously a limit. Most people won't be practically. Most people can't repay their mortgages. That's why they're taking out 20 or 30-year mortgages. If they hadn't, literally having, there's a few people around there who have cash on one side and the mortgage on the other. But that's a very unusual situation. In the UK, I have something called the offset mortgage, where you can deposit cash and you can borrow money, and they don't actually charge you on the mortgage, but they don't pay you any interest on the cash either. But in most people who do, this is a very rare situation where someone's got enough cash to pay off their mortgage. Usually they don't, because they've taken that cash and invested it somewhere else, because it makes no sense to pay, let's say, 6% on your mortgage and earn 2% or 3% on your cash. So, and then you pay tax on the interest you've earned. So 90% of the population, 95% would say that doesn't make sense to have that cash. If I'm going to keep it in cash, I'd better pay off the mortgage. Otherwise, I'm going to invest it in something more useful.